Well, obviously, the activity as it was before, there is probably less pronounced as it was before. I think people started to just look at earnings, which were in the middle of earnings season. People started to look at the macro data, the manufacturing data that is positive. People started to think about, the sources of volatility that actually have come through the first month and through the first week of so far in February. So I think as investors have started to just realize, there is a lot of noise in the market and started seeing the activity, the volumes, started to go back and started to look at what are the real sources of long-term investments possibilities.
Mike, interesting to see the VIX close down by 10% or so. I mean, for ages we're talking about will it close below 20, and that would be a bullish sign. Is 30 the new 20? Is dropping back below 30 a bullish sign?
It usually doesn't hang around here for very long, so it's bullish in general for it to be coming in. And 3 points is a decent move to lose in a single day. But, it's not definitive at this point. I mean, it's still very elevated. I think we were at one of the highest levels for the VIX last week for being within 5% of an all-time high. So if you have a weekly decline of less than 5%, usually, the volatility markets can kind of absorb that without that necessarily spiking the VIX. So I think that shows you that people are somewhat agitated, somewhat twitchy about protecting gains and trying to insulate portfolios. And that's been the case for a while. I mean, I think a lot of the wild activity in the options market has just kept professional investors a little bit more on guard about the possibility of short-term moves in both directions and not just, assume it's going to be a very slow clockwork market.
Omar, I feel like the market's a little indecisive about whether it's growth or value. At the end of last year, it really was value and cyclical groups that shine the brightest. But so far this year, technology's done much better. It was punctuated by good earnings from Facebook and Microsoft and Apple. We've got Google and Amazon tomorrow. So which one are you telling clients to go into? Which strategy? Or maybe it's both, like we saw today, work?
Well, that's exactly right. This is the perfect time for the barbell strategy, even though I think there's probably a little more than just barbell. As you well mentioned, we started this pro-cyclical rotation, at the end of November of last year. And it was very clear, how value stocks started to do very well. So far, energy has done very well in this year. And other sectors that are more traditional value. But if you actually think about what may come down the pike in terms of technology leadership, those companies that actually tend to generate significant amount of free cash flow, and their yields are incredibly attractive. So we're seeing a phenomenon here that is kind of interesting, probably mostly related to the low interest rate environment that is allowing technology companies to continue to lead the market. And if you actually just think about what that means is that, people will still have, video conferences. People will still use technology for, many things that are in the business as well as personal. And therefore, that is allowing those companies to continue to generate significant amount of cash flows and significant amount of earnings per share growth.
Shepard Smith here. Thanks for watching CNBC on YouTube.